Welcome everyone. I made it just in time, or at least a few minutes late at least. I'm Seth Bradley, Chief Legal Officer at Tribevest, securities attorney, fund manager, entrepreneur. Super stoked for you guys to be here. And today we're going to be breaking down, really it's the hottest topic in capital raising right now. And it's, how do I find and attract fund managers to help me fill my capital stack? And really answering that question starts with building a professional fund to funds program so that you can attract the right fund managers. And at the core of that is building your fund to fund economics. So, in other words, how much can the fund manager make in your deal, and what are the passive investor returns that they'll see? The lead sponsors, who master this, they're going to move. They need to move quickly, and they need to master this so they can be the big winners and build something repeatable and ultimately scalable. So if you're serious about building a capital raising machine, you're in the right room. And before we get started, know that if you stick around to the end, we have a massive giveaway, but only if you stay to the end. All right, quick legal reminder. This is for educational purposes only. Tribevest is not a law firm, despite of what many people think. We don't give legal, tax, or investment advice. And I am an attorney, but I'm not your attorney, at least right now. So seek your own counsel. All right, cool. Let's get into it. Okay, first, if you don't know me, if you want to get in my world, I set up this QR code. It's really just a gateway to get a ton of free stuff that I used to sell for a lot of money, but now it's free. So just scan that. Let's stay in touch. And if we haven't met, so I've closed billions of dollars in real estate transactions as an attorney, capital raiser, and deal maker. I've worked in big law. I did that for about 7 years before I had enough of that. Founded companies. I have my own boutique securities law firm, Raise Law. And most importantly for this presentation, I'm a fund manager, I'm a syndicator, I'm a lead sponsor operator. So I'm on the business side of capital raising too. And that perspective is why I'm here today, because I know exactly how this game works, where people get stuck, and how to set yourself up to win. I understand the lead sponsor problems, and that's because I have them too. And our guest of honor today, and Chad, I don't know if you had a chance to introduce yourself yet, but Chad's the founder of Care. He's a business coach and educator and a seasoned passive investor with a passion for helping others build wealth through real estate. He co-founded Left Field Investors, which many of you, I'm sure, have heard of. It's a nationally recognized community created to educate and support limited partners. And Chad currently partners with us here at Tribevest to support our fund to funds program model, helping investor groups and lead sponsors structure SPVs, structure their program. And we're really aligned in our values and our approach to helping people build their capital raising programs. Chad, do you want to say anything?
No, that covers it. Great to see everybody. There are some familiar names in the participant list there. So great to be connecting with people again in a different avenue. But thank you.
Awesome. And we'll be getting back to Chad here to dive into the numbers, because I'm an attorney, so I don't deal with numbers. So what is a fund of funds program? Let's level set. Let's start kind of at the basics. A fund of funds program is really the infrastructure that you need to build so that multiple independent capital aggregators, or we like to call them ICAs, you probably know them as fund managers, can invest in your deal through clean and compliant SPV fund of funds. It gives your passive investors a trusted entry point through those fund managers, and those fund managers can build a real business, and you, the lead sponsor, obviously a scalable and repeatable capital channel. That's really the ultimate goal here. And this just kind of shows, and we can send you a link if you didn't see the last presentation. We talked about this invisible wall, and how the fund of funds, how a fund of funds program can actually help you penetrate that invisible wall and get to and access many qualified passive investors that you otherwise wouldn't be able to do. So who should build a fund of funds program? I'll say off the get-go, because we've worked with many lead sponsors and folks, it's not for everyone. But if you are a lead sponsor and you're doing deals, maybe 2 or more a year, and you're tired of chasing small checks, or you're used to the co-GP model and burning hours managing all those co-GPs, then this is probably your unlock. if you want to scale your capital raising efforts without sacrificing equity to your co-GPs or potentially institutional investors, and you don't want to sacrifice control and compliance, this model is really how you do it. So why build a fund of funds program? And I think we need to talk about what's really going on in the capital raising world first. So, everybody here is seeing it, right? Trust is lower than it's ever been from LPs. And it's not because they're being unreasonable. It's because, they've lived through, or they are living through, nightmare capital calls and uncertain economy, poor transparency and communication from both the lead sponsors and the co-GPs, whoever it might be, and really sponsors that just haven't delivered. They've really been riding the wave of a really great real estate market for a number of years. And then when it turned a little bit here in the last couple of years, the folks that didn't know what they were doing were caught with their pants down. It's you're seeing it, and that has eroded trust from passive investors, and that has resulted in a really difficult market to raise capital in. So any of y'all out there that are raising capital, you know how difficult it is. If you would have been doing this 5 years ago, it would have been 10 times as easy. That was the time when I was raising a ton of capital, and it was much, much easier than it is today. And we've all heard the horror stories about, co-GPs. A few years ago, we were all kind of meeting random people at conferences, and we didn't really know each other. We just knew of each other, and we all just said, hey, let's get into a deal together. Let's all raise some capital and co-GP together. And there's really only one or two people actually doing the work and operating the property. And, some of those deals just didn't work out. They went south, and people disappear, and they're not showing up. They're not doing what they said they were going to do a few years ago. And investors are upset. And even if it's their investors and not specifically yours, they actually are yours. Everybody is a co-GP. Everybody's part of the same entity. So if they upset their investors, those investors are also going to be upset with you. And now we're just staring at cash shortages, capital calls, and maybe worse, lawsuits. You're seeing it every day. And again, that's why the passive investor confidence has been eroded. Other things you can look at are institutional capital. It does seem like the next logical step, and for some people it makes sense, right? But it comes with longer due diligence periods. It comes with a loss of flexibility and control. They'll want you to structure their deal in certain ways to make it work for them, and they're always going to have kind of built-in takeover rights and things where you could potentially lose control of your deal. So it does come with risks, even though you could potentially get bigger checks. And sometimes those checks are just too big. Sometimes your deal is small, where you're raising $1, $2, $3, $4, $5 million, and they want to write a check for $10 or $20 million, and your deal's just not big enough. So it has to be the right fit. And that's resulted in us finding a solution. And that solution is really leaning on your trusted network that you have. We're assuming that you treated your passive investor base with care and transparency and communication, and that's really your biggest asset. And because they believe in you already, and what they really need though is access and structure. That's what they need. If they want to actually raise capital from you, if you want to flip them from a passive investor to raising capital for you, they need the access, the education, and they need the structure. And that's where a fund of funds program kicks in. And here's the formula for an effective real-world fund-to-fund program. There's really three components, and we've kind of whittled this down as we've worked with dozens of lead sponsors. You really need a program guide. Standardize your fund-to-fund structure and market your program. It's really a marketing piece. It's really a guide to show your fund-to-funds, potential fund-to-fund manager, how much they can make and how much their passive investors could make with either you as a lead sponsor or potentially your specific deal. What we're going to talk about today, it's the focus, is the fund-to-fund economics. So make sure everyone involved understands what they're getting out of the deal. Again, everyone wants to see the numbers, and sometimes it can get very complex and confusing. And that we have found is the hardest part to solve. But luckily, we have Chad here to help us break all that down. And we'll jump into that next. And last is the fund-to-fund funnel. You need to figure out a way to educate and find and educate those potential fund managers, and a way to identify and onboard them, the ICAs, from inside and outside your own investor base. All right, I'm going to hand this one off over to Chad here, our Tribevest partner, coach, and passive investor advocate, and he's going to show you a real life demo of fund to fund economics.
Yeah, great. Appreciate it. Seth, I'm going to try to steal the share.
Yep,
Looks like maybe you have to stop sharing first and then I can do
cool.
it. There we go. And bring in this. Tim. So yeah, we put together a template just to try to give you the capability, either the operators or the capital raisers, the ability to model this out and understand how the fund-to-fund model would work. We utilize this not to re-underwrite the entire deal, but basically to try to catch um, where the fund-to-fund model structure would fit into the deal for the operator and for the fund manager, ultimately to be able to give marketing material to the LP to help them understand what capabilities they have by joining the fund-to-fund model. Just quickly, I'll show we have an instruction tab in here that gives you some brief instructions. And I really try to minimize the number of inputs that you need to do to get a basic calculator, the basic calculator to work. But I also threw in definitions of what the intent of the data was for each of these. So I won't spend time on this, but just to point out that the instruction page can give you a bunch of information. But the idea with this was we wanted you to be able to fill out the, again, most basic information to be able to give you a view of how the fund-to-fund structure works. And we did that by using this template for an input that just has a few elements in here. And I'll call out, we gather some information at the direct investment level. So this would be like the operator's marketing material that they would give to an LP. Then we also step down into the SPV of what the operator is agreeing to fund the SPV at with some basic information. Then the SPV manager ultimately has their ability to tweak what they want to provide to their LPs a little bit further if they want to juice the deal a little more, or whatever the case may be. And then lastly is what the SPV manager fees are to know what they're going to get paid and their splits. And also we want to gather a cash flow from you. And I've got a sample one that I will just start throwing some stuff in. This again is very generic information that I just put together for sake of showing you the model that we collect this deal level or the direct investment level information mostly as a comparison. It's not used in the formulas or the calculations so much, but it ends up being our comparison of how does the investment work for an LP if they went directly compared to if they went in the SPV. So sorry, I need to scroll down here a little bit more and then we'll be in. But you can kind of get a feel for the data that we're collecting. A lot of it is what is the preferred return, what is the split that the SPV will have for the SPV manager and the LPs, and what are the minimums that are required. Those are the basic information that really gets thrown in here. Again, trying to keep this simple. And this model should work for most asset classes. It hasn't been tested on debt. It's probably not going to work on debt, to be honest with you, but it should work on many. We've had multifamily, we've had self-storage, we've had marinas. So we've seen it through a few and it's worked out just fine with it. That it should hit on most asset classes, but if we get into a unique situation, we absolutely could do some custom adjustments to this to make it work. But those are all the different elements that I'll put in, and I won't walk you through those. You guys should all be familiar with most of that. But then this is the calculator. This is what ultimately we populated. That at the very top, right out of the gate, you'll get this comparison of what if an LP invested directly in the deal with the operator versus in the SPV, the way it's modeled in this case. And this is where you can do that direct comparison of, are there better returns or can you enhance the returns for the LP to want to go into the SPV in order to do qualified capital raising? And then next to that is also the calculations for what the SPV manager compensation is, so that you can quickly see any one-time fees, any management fees, and what your profit splits are to ultimately get what percentage are you earning against the capital that you're raising. And I won't go through all of this. We can go into it with more detail if anybody ever wants, but you get a feel for the flow of this by looking at what the cash flows look like, taking out the fees that we would be charging for. This would be the SPV manager fees, and then there are some Tribevest fees that are in here as well. And then looking at what the net returns work out to be, especially once you start counting the pref and understanding any accrued returns that weren't met because cash flow wasn't high enough. All that's baked in to ultimately get down to a profit split here between the SPV investors and the SPV manager. And at the very bottom is the total net returns for an LP. And then what an example would be if somebody invested $50,000 in a deal and ultimately they're cash on cash. So that's a real quick walkthrough, but I just kind of wanted to show you what's in here. And again, trying to minimize how much input you have to do. But ultimately, the goal would be for the SPV manager to be able to come in and they could tweak these numbers. The numbers that are in gray are going to be locked formulas, so you don't need to mess with those. But you can come in and play with these numbers to adjust them slightly. Say you keep it at a 7% pref and you knock it to 75-25, you can see what the return difference is by doing that. So all of this is built just to give you the flexibility, at least from the most generic kind of form of a deal, to be able to model out what the SPV would look like. But I'll pause there and Seth, turn it back over to you.
All right.
Stop sharing and you can have that back.
Let's see, you guys in the right view here.
Yeah, we've got you, Seth.
Good enough. All right, thanks, Chad. Yeah, and I think a lot of people will be reaching out to get that tool for sure. So we'll make that available. All right, so really the call to action at the end of this will be to book a call with us if you're a lead sponsor, and that's really where things kick off. So, and then once we start building with you and it's in motion, here's what the program looks like end to end in a visual. We kick things off with a consultation and program design call. We sign a partnership agreement if it's a good fit, and we provide you help with and help you build the custom tools. So this is kind of new. We actually called it done for you program. Previously, we had given you certain tools and things to work with, maybe a template, but now we're actually going to work hand in hand with you to build your program. So it's a done for you program, but it's really a done with you program, and we'll help you roll this out. So we'll help you build those things that I mentioned in the previous slide, the program guide, the ICA funnel, and the fund-to-fund economics that Chad's talking about. And then the thing we won't do for you, you've got to go out there and find a deal. You've got to go out there and find ICAs or develop them from your passive investor network. And then you hand them off to us, and we create the fund-to-fund SPVs for them and for you. And we wire big checks to your deal. So once it's built, the second time around is a lot smoother, a lot faster. Everybody knows what's going on, and it's just rinse and repeat. And again, to be clear, this is a done for you program, and that's huge. Again, we used to just provide certain things to you guys, and then you would kind of mull it over with your team and try to build these things. And maybe it's the first time you've done it, so it's difficult. But now we've said, look, we're gonna get in the weeds with you and build these things for you. So we'll hold your hand step by step and help you build this thing out. All right, the final thing I want to talk about before we get into the Q&A is an opportunity for the fund manager. What does that look like? So, and what we've seen with our most successful sponsors is that the best place to find fund managers is their own passive investor base. Because right now there's a lot of fund managers out there that are good and successful, but you're competing with a lot of other lead sponsors to get them. And you'll see once you get out there, there's people whining and dining them, getting them building those relationships, and you can get into that game for sure. But you already have an existing passive investor base that could be successful and could be great fund managers. So, the point of this is to bring this to life. What is this? What do you have to offer the fund manager? So this is meet Dr. Brad. This is new, Brittany. Dr. Brad, I'm not sure where that came from, but I love it. Let's do it. So he's a high earning W-2 physician. He's invested passively in multiple syndications, so he knows how these things work. Maybe he has 3 short-term rentals and wants to scale, a few single-family rentals, things like that. But he doesn't want to give up more time, money, and sanity, particularly time and sanity, right? So he's respected his community and has a strong professional network, and is the kind of guy that people already go to for investment advice. Like, this is the first mover. He's the guy that's investing passively, talking about syndications. His doctor friends and his network maybe don't have that exposure or that access, and he's the guy. And here's the magic. The magic is that trust transfers. So Dr. Brad's friends, family, and colleagues, they already trust him, maybe because they work in a high pressure medical field with him, or maybe because they're just friends and family. But wealthy people tend to have other wealthy friends, and they want to invest just like him. They don't want to just do their own research and due diligence and start from ground zero. Maybe they don't want to put the time in to find deals and sponsors like he already has. So when he steps into the ICA role and launches a fund to fund, he actually creates that access for his network and gets compensated for making that happen. By doing this, Dr. Brad can expect to make at least 10% is what we're seeing across the board right now, typical. 10% of his raise, but that's across the life of his deal. It's not just all up front. It's, cumulative fees and profit split and things like that. So if he raises $1 million, he stands to take home $100,000 or more over the life of, let's say that 5-year deal. That's pretty good. And when you start stacking those, that's a real business, and that's real money. And we've seen that firsthand with people stacking these deals over and over again. And again, if you use Tribevest, we're handling all the messy stuff, all the back office stuff that makes this nearly impossible for this type of person to do that already has a very busy W-2 that they have to deal with. So let's flip it. So you're the lead sponsor, and what does Dr. Brad do for you? He becomes your most trusted, powerful capital raising partner. He aggregates the trust that we talked about. He brings in warm leads, and he's a clean line in your cap table, just one, through a compliant fund-to-fund SPV. And you didn't have to give up co-GP equity or bring random people that you don't really know that well into your business partnership. You don't lose deal control or waste time training someone who doesn't get it or might not be able to raise capital. You've kind of done your due diligence and identified this person as a really good potential partner. And then you can compliantly raise 2 or 3 times as much capital with really half the effort that you had to before with co-GPs. So here's an example of a common path we see. Dr. Brad, like I said, he might own some single family rentals, might own some short-term rentals. You see that a lot. So he's an active investor. And then maybe he tiptoes into the syndication world, either as a passive investor or possibly as a co-GP. And we've seen, varied success with that, mixed results. But now he has a decision. Does he stay active or does he go passive? And given his high income profession, the right move is almost always to go passive, and they do, right? So you see these doctors, lawyers, dentists, they end up going passive, and what you'll see in those deals, they're going to double their money in 5 years. That's typically what you're going to see in a passive investment, and you can see that schematic here. But again, what if there's more? What if there's a way to 2x or 3x those returns that he would have gotten just by investing passively? So he needs to become a capital aggregator to be able to do that and to build a quote unquote passive business. Now there's a little bit of work up front setting this up, but once the capital is raised and once his network is engaged, then it's pretty passive for him. So here, that same 50K investment in the last slide, now he earns admin fees, a piece of the upside, and he doubles or triples his returns just for packaging access to his network who already trust him and basically introducing them to your deal as a lead sponsor. So A lot of this comes down to evaluating whether or not your passive investors are going to be very good at launching their own fund to fund business. Some of them will be good, some of them will not. And there are three main criteria that we've seen that you need to look at. And the first is, does he have the relationships with the lead sponsors? And that's you. So he does. Does he have experience evaluating deals? If he's invested with you in multiple deals, yes, he does. And does he have a trusted network of high net worth peers? And that's the big one, right? Like that's the big one. And that's why you see so many doctors be really good at this, or dentists, or really good high-end salespeople, people like that. They already have a trusted network of high net worth friends and colleagues that could potentially invest alongside of them. So you can imagine if you multiply Dr. Brad by 5 or 10 or 20, then now you've built a massive capital raising pipeline to give you the peace of mind that you need to make offers and scale your real estate business or your PE business, whatever it might be. All right, so let's quickly put some numbers on this. 50K in a deal as a limited partner. Again, you might double your money, so you get 100K out. But here, instead, he still invests that 50K passively. So he invests alongside of his passive investors, but he also leverages his network and raises, let's say, $1 million. So he'll get, a standard, let's say, 2% due diligence fee up front. So he'll make 20K from that. 20K from that. And maybe he'll make 80K at the exit from, let's say, a 10 or 15% equity split at that fund to fund level. And again, you can see these numbers play out in that fund to fund calculator that Chad presented. But that's an additional 100K of revenue that he would not have seen. And if he also invested passively in that deal because he believed it, there's where you see those multiples on his return. And again, by using Tribevest, he's able to do all these things without going out and finding a securities attorney and finding a CPA and finding an investor report and all these different things that you need to put together to be able to run a fund to fund. Just a couple quick success stories with real clients of ours. These are real numbers. These are real Tribevest clients. Lone Star Capital, 4 deals and counting. There's actually more than that at this point. 6 ICAs, 11 fund of funds, and around $6 million raised. And again, these numbers have went up since this was updated. Another one, Aspen Funds, that you guys probably all know. Fund of fund program results: 4 funds, 29 ICAs, 28 fund of funds, $18 million raised, and introductions to 200 limited partners. So this is in theory. These are our clients that we work with every day, and they made the commitment to build a fund of funds program with Tribevest. So quickly, what is Tribevest? Platform built to support independent capital aggregators specifically. We are the back end that just makes it really easy for anyone to launch a fund of fund business. We handle the SPV formation, the offering docs, compliance, filings, investor onboarding, tax filings, K1s, integrated banking, cap table distributions. You name it, we do it. It is a fund of funds in a box, done for you, done for them, so that busy doctor or professional can launch their own business and don't have to worry about really much else other than introducing their investors to the deal. The lead sponsors and the ICAs stay focused on raising and executing, and we just handle all the messy stuff that nobody wants to deal with. So far, in just over a year and a half of launching this program, 100 plus ICAs, 150 plus fund of funds, and well over $100 million raised. So the new way versus the old way, you can see the differences here. The biggest problem to solve the outdated co-GP model is not what, but rather how. And it's always been the fund of funds. That's always been the answer. We didn't invent it. It's a proven model. It's always been there. It's been the golden alternative. But the problem is, as you know, it's the IC has to put their own fund together now. So that gets expensive. It gets time consuming. It gets hard. And because they have to find their own CPA, their own attorney, open their business banking account, get their LLC, administer their own fund, all those things that the lead sponsor used to do for them. Now they have to do it. So that turned a lot of people off. But now fund of funds is done by Tribevest and administered and formed by us, and it is much, much easier for the fund of funds manager to be able to administer their fund. So here's what you get with Tribevest when you form your fund to fund program. So one-on-one consultation to design your fund to funds program. And again, not only templates for your funnel and your economics and things like that, but now we'll actually build it for you. So we'll have a consultation, we'll talk about it, we'll see specifically what you need customized, and we will build it for you. So if you're a preferred partner, you're also going to get execution priority for your fund managers, fund to funds. And again, this is free to you as the lead sponsor. We don't charge you guys anything to do this, to set this up, because we actually monetize from the ICA. So they're the ones that will actually be our paying clients. But we go through you guys because you have the deals, and that's what we're here to do, is help you set up this program. But we do have a few asks from you. Treat this like a real channel, be a real partner, be active and proactive, build and roll out your program and your playbook and roll it out to your network. This isn't like tiptoeing in. You have to commit to it if you want to see results like Lone Star and Aspen and our other partners that have really excelled at this. You have to go all in. Anybody that's in business knows there's no such thing as is half-assing something. You've got to get in there and just commit and do it and go all the way. And if you do, you'll see success. We also need you to qualify your fund managers and find them and cultivate them, because we don't do that for you. And then you obviously need to find your deals. And then after that, we handle the rest. And on the backside, we just really want you to provide us with feedback. We're always open to listening to our clients and continuing to iterate and build. All right, let's open it up to questions. And we've also got some frequently asked questions as well we can chat through. Rohan, you want to jump in here?
Yeah, for sure. With some Q&A questions here.
Yeah.
Good. Awesome. Let's see here. So, luckily they've answered most of the questions here.
Oh,
Um,
cool.
Randy has a question. Do you have any best practices that show like how other real estate sponsors have successfully rolled this out?
Yeah, we sure do. Brittany might be able to chime in here as well. This is really her expertise in helping lead sponsors roll out these programs successfully. But yeah, I'll let her take the stage here for a minute.
Sure. Thanks, Seth. Yeah, like so some of our biggest partners like Aspen and Lone Star that Seth touched on, like they like kind of just dipped their toe into it, but then they saw that like the impact that this channel had on their capital raising abilities, and they just really went all in. So like for Aspen, for example, it became a company goal of theirs to have 40 plus fund to fund managers raise capital for them in the year of 2025. So they saw the impacts that it was able to have on their business, and they made it a company goal. So I think it's really about like how do you integrate this channel into anything that the lead sponsor is doing, as well, like just as much as they're putting emphasis on maybe retail investors that they're reaching out to and building that network, like groups like Aspen Funds are doing the same thing, but with the fund of funds channel. And then like even for them, they partnered up with Lone Star Capital in Austin and did a whole event around fund to fund managers. And it was great. Like it was education, it was activity, it was collaboration. Seth and Brandon were there, and it was just a full day of just getting to know their fund to fund managers and instilling confidence in them and getting them to where they need to be. So I think there's a lot of different routes like sponsors can go with this, but I think at the end of the day, it's like truly how do you integrate this channel into just being part of your sales and marketing motions.
Can I actually add some context? So I'm a marketing consultant. I did help a sponsor build out their fund to funds webinar from a marketing standpoint. And what I will say is that it's relatively similar to like presenting a deal to LPs. You know, you'll have a webinar deck with slightly updated financials for the fund to funds economics. And then I think really the key for them and why I was very successful, it was $9 million deal. They raised about $5 million for it, and they had about $1 million raised from fund to funds. And what was really good about theirs is that they tracked theirs like a pipeline. So they had, call it 50 people register for the fund to funds webinar. I think they had about 20 people after express interest, and they kind of track people through the pipeline. That way they didn't get lost, and like they're able to see who's serious and who's not serious. And then the final thing is that once someone agreed to become a fund manager, they had them sign like a non-binding LOI. And I think what that is good for is like setting the precedent of like, hey, here's what you're trying to do. Again, it's not binding in any way, but it just kind of sets expectation properly. Go ahead, Seth. I think you wanted to continue on that.
Oh no, I was just gonna say that, some of the things that we talked about already are key. So rolling it out, like Rohan said, and putting into those materials really some transparency elements like the program guide. The program guide is really going to tell your passive investors, if you become a fund manager, here's like what you can expect to make, right? Like, hey, if you raise 500,000 bucks for me or raise $1 million for me and you charge these fees which are in line with market, then this is what you stand to make. And then some people's minds are just blown. They're like, oh, wait, my $50,000 turns into 150 or $200,000 instead of just 100. And they're like, okay, well, it sounds like a lot. And then you just show them also that, they're not going to have to do all these messy things because Tribevest makes it easy. We handle all these things for them. All they have to do is collect their investor information and send it over. That's it. So they just need to leverage their network, and there is an education hurdle there that you need to overcome, but you can do that with the kind of the funnel that Rohan's talking about.
Yeah, sure. Let me just I think the chat may not be working this time. Apologies. Seth, can you go to the next slide, which has the QR code for people to scan if they want to schedule a call? I think,
Oh yeah, for sure.
yeah, that way, because there's a lot of like intricate
Yep.
questions now, so I think it'll be good for at this point. There we
Yep.
go. You guys
For
to
sure. Yep.
schedule a call with Cam, he'll kind of go through it. Yeah, I'll just perfect. Awesome. Yeah. And then obviously if you guys have detailed questions, like obviously I can you can send me an email as well. I can answer those.
Oh, are you not seeing the questions?
Yeah, I think I'm seeing them now, but I just wanted to make
Okay.
sure. Perfect. Okay.
Cool.
Let's see here. Alan asked a question of does this work for ETA deals? Do you guys know what ETA deals mean? I'm not sure what that means.
Not positive. Alan, can you clarify?
Can you clarify, that'd be great.
We can circle back. Yep.
And then Chirag has a good question here. How does the fund manager, how do they see where their LPs are in the stage? Like sign the PPM, submitted the accreditation letter. Like how do they see where they're at in the Tribevest process?
Yeah, so right now we manage each fund to fund on a Monday board. So Monday is an operating system to track tasks, and each fund manager is invited to that board, and they'll be able to see when we've opened the business bank account, when we filed for the LLC, when we got the EIN letter, when we've completed the offering documents, things like that. And then some of the major milestones, like completing the draft for the offering documents, they are sent directly to the fund manager for them to review. And then once those are finalized, they'll get sent back in a final PDF. And then they'll be able to see kind of or track those details. But just also a preview, we are building a more elaborate platform for investors to be able to, for not only investors, but fund managers and lead sponsors to be able to track the various places in the setup, as well as the investor onboarding and things like that.
Perfect. Let's see here. I think what Chirag's question was, I think from my understanding, he's a fund manager. He's trying to ask
Mm-hmm.
about his LPs. Like, how do I see like my LPs, like where they're at in the process? Like, have they wired their funds? Have they signed the PPM? I think that's what he's trying to ask. Brittany, you may be able to answer that one better.
Yep, same thing. Brittany, you can chime in, but
Yeah, it's the same thing. So they get access to a Monday board and it'll show the status of where their investor is in the process. So, instructions have gone out, offering docs are with the, investor to sign. They're ready for counter signature, wire's been received or wire instructions sent. So all those statuses are tracked in Monday right now. And then every fund manager is assigned an account manager, along with a team of people that will help expedite the process when it comes to capital raising, because we know that's the most critical time of getting the money in is really important to everyone. So we have a team of people dedicated to herding the cats, if you will, when it comes to that process.
Perfect. Let's see here. I think Alan gave some clarity here. So I believe Alan is doing mergers and acquisitions where he's rolling up companies. Have you ever worked with anyone to raise capital in that space? Okay.
Yeah, we have for sure. Yeah, we have multiple examples of that. We have a lot of flexibility at the fund to fund level, whereas we don't really care what the asset is at the lead sponsor level. It doesn't really matter if you guys are buying roofing companies or paving companies or an apartment building or a mobile home park. It really doesn't matter at the fund to funds level. It just needs to be set up properly, kind of on the front end.
Perfect. Awesome. Let's see here. Cool. Let's see here. I think we answered that question. I think Enrique had some more detailed questions about like what is the exact timeline? Because he's a lead sponsor trying to share this with his ICAs. It's like, hey, you're gonna have onboarding call with Tribevest, like walking through the first, call it 2 weeks of becoming a fund manager.
Brittany, you want to jump in there?
You want me to do it?
You're the expert.
Yeah, so really it starts with, from a lead sponsor perspective, it's sending us your target deal docs. We really have, so we have a deal intake process and we need to have those target deal docs on file, because that's how we build the templated fund to fund documents. So it's that you'd be meeting with Cam on our team and he would be, making sure that we have all the information we need from you're ready to get this deal going and you're going to send us potential ICAs. And just clarifying, like what that means. Like we're looking for, you've already qualified these ICAs, they're bought into your deal, they understand, the economics and they're, ready to set up their fund of funds. And so that would, entail handing off the ICA to Tribevest, which is Cam. Cam would talk to them, what we call a handoff call, set expectations. We give them a worksheet to fill in their economics and, details about themselves and their fund management LLC, which is how they would be represented in the fund of funds. And then from there, once that worksheet's completed and we feel like they're ready to go and set things up, we'd send them their onboarding documents, which includes the MSA, limited power of attorney, mutual NDA, and bad actor disqualification certificate. And that's where we would ask for payment of $5,000 for the setup fee. And then we get to work from there. So we go ahead and set up the entity, file the LLC, get the EIN, set up a bank account, get everything set up on the Tribevest platform. And then in tandem of that, we're setting up or we're drafting the offering documents. So we've already received the target deal docs and your economics in that worksheet. And so we'll get those drafted in 5 to 7 business days, everything's set up, ready to go. And then we have another call to set expectations with the team on, your timeline and deadlines for your capital raise. And we start onboarding investors immediately once those docs are finalized. So we can spin things up really quickly and we can get your investors onboarded really quickly. It's just communicating expectations and deadlines is really how we align to get everyone in the door.
Yeah, I think
For sure.
from my understanding, like I feel that once you have like a potential ICA and you can have the M's sign the LOI or not sign the LOI, depending on what your preference is, I think that as long as they're qualified, as long as they understand the process, Tribevest can kind of help them walk through that. Is that a correct assertion, Brittany?
Yeah. Yeah, they need to be bought into the deal. Like Tribevest isn't gonna like get them bought into the deal. They have to buy into the deal with the lead sponsor. And so setting those expectations, getting that buy-in before you hand off, like we're here to execute and get everything spun up and get the investors onboarded, but that like we're that execution arm.
Yeah, I think that's exactly why I feel that it's good to have the marketing pipeline set up properly so that before you hand them off to Tribevest, like they're bought into the deal. Again, I keep saying LOI, but that's just more of a semantics thing so that they know like here's what I'm trying to do. That way it makes Tribevest and your guys' job easy. I assume
Yep.
that's correct.
Yep.
Perfect. Cool. I think final question here in the Q&A. If I have a fund with another platform, but it hasn't closed on a deal, could I transfer that fund to Tribevest, or should I just like set up a new fund? What would be like the best strategy?
It would probably depend on the type of fund you have set up, but we do allow you to migrate over from other platforms to our platform. So if you want to set up a new fund to fund here and you want to manage everything all in one place, we make it easy for you to be able to do that. But again, the caveat is it depends on what kind of fund it is. If it's like a really complex fund, with I'm just trying to think of something. More than likely we'll be able to migrate it over. We'll just put it that way. There's a few caveats to that, but I would say if you're on another platform, you want to manage all your stuff with us and start a new fund with us, then manage everything on our platform. We can do that.
Perfect. And then I think Brittany, if you could, okay, perfect. Just send him the link to the fund of funds. That way he doesn't have to do that.
I'm responding right now.
Cool. Awesome. All right. Anyone have any final questions? Well, I'll give you guys a few minutes before we wind it up here. Yeah, I think if you guys have like detailed technical stuff, that's where I think scheduling a call is a good answer. Just that way.
Yeah, cool. And I'll just say that, the Fund to Fund Accelerator, you can share this link with your potential fund managers or passive investors who are interested in becoming a capital raiser. This is a great way to utilize this tool is just send them the link. They can register, they can watch, and they can learn all the basics all the way up to a lot of the fund to fund economics, the more complex stuff that Chad went over. So it's a really good start for somebody who's like, all right, it sounds great. I can triple my return, but what is a fund to fund? Well, that's a tough educational hurdle to jump over. So this is a good place to start is sending them that fund to fund accelerator.
For sure. I think that's perfectly. I've gone through it myself. It is really quite in depth, and I think it really does a great job answering a lot of their questions. So the Trifest team did a great job with it. Cool. All right, awesome. I think that's everything. There's that QR code on the screen with Cam if you want to book a call with him. If you have any questions, obviously, feel free to send him an email as well. And I think it was good. Anything else? Any final thoughts, Seth, Brittany?
Don't be scared of Cam. Scan it, call him, book a call, and we'll handhold it through it.
All right, awesome. Thanks, everyone. Good
Thank
seeing you
you,
all.
Chad.
Thanks,
Thanks, everybody.
Thanks, Chad.
Thanks, everyone.
Thanks, everybody. See ya.
See ya.
See ya.